Hey team, this is Ben. I wanted to show you the spreadsheet that I built to backtest the trades that we see set up in the trade and perform room. So this video is primarily for the team members in the room who will have access, if you would like, to get this editable copy so that you can enter your own trades or trades that set up upon review and basically backtest to see which trades are working the best, which situations they're working the best, and maybe find whether or not you are getting the same results as you should be, or better. So, first of all, if you're in the trade and perform room, all you need to do is visit the link in the that I shared in the Slack channel, and then it will. You got to ask for permission to edit and view the spreadsheet. I will give it to you, and then the first thing you should do is go up to File and hit Make a Copy. And what that's going to do is it's going to put a copy in your own Google Drive, and that way you can edit this, and you don't have to worry about other people deleting your trades, basically. You can also right click down here and you can copy this to a new spreadsheet. That's another way to do it. If you already have your own spreadsheet and you just want to add this as an additional tab, that's the way to do that as well. You can also, you're welcome to work in the editable spreadsheet on my drive, but just realize that I'm still kind of doing testing on it, and other people are also probably messing around with it. So you're best off, if you're actually going to use it, you're best off making a copy for yourself. And then if I make some updates that end up being helpful, I'll let you know and you can update it. So first of all, why am I building this? The most important thing I'm finding when it comes to improving my trading is that I need confidence that the trades I'm taking are working if I do them correctly. And the way my brain works is I really need some objective data to show that if I just stay on process and take the trades that I'm supposed to take and nothing else, that I'll do well. This need for me to prove this to myself gave me the motivation to take the time to build this. Obviously, you don't need to use this, but I'm finding that I'm learning a lot about the trades I'm trusting, and then maybe the trades that I should be trusting, just by putting in a day's worth of trades that I see upon review. It's also a really good way to keep track of which trades you're taking and whether or not you're getting a win rate that you expect, and maybe filter out what's going wrong. So let me just go through each of these boxes, and I'll explain whether or not it's something you should be adjusting if you want to use this, or if it's something that's calculated, and then also how it's built. So if you want to adjust it on your own copy, you can. So first on the left, this is just the trade number. So this is simply just numbering the trades. If you're keeping track of how many trades you're taking a day, it might be helpful to have that. The next three cells are the date. So month, day, and year. This is something you enter yourself. You can see all these trades are from May 6th. The tick chart is referring to, let me find this here. It's referring to the tick amount of the Renko chart on our algo. So if you're using the 24 tick for NQ, like I was, when I was entering these trades, you could write NQ24T or whatever you like. This is totally editable and it does not affect any of the functions. The time is just, I've got it in central time because that's what the algo is at. So it's easier for me to find the trade in the future if I want to go back and say, oh, was that entered correctly, or did I actually take that trade? I've got the exact time there. And then you've got a couple choices for the session. I've put in here the New York Day session, or RTH, and then I'm separating out Asia and Europe. So Europe being after London Open, or you could do DAX Open, whatever you prefer. But the idea here is that later on, I can filter out all of the trades I take in Asia, for instance, or all of the trades that I enter in one session but hold into another. For instance, if I entered in Asia but held it through London Open, is I would have to choose cross sessions. And then pre-market New York is when Europe is winding down, but New York hasn't opened yet. Since it's still technically Europe, but it's an area that I'd like to trade more of, and I know a lot of people, including Simon, do trade that period specifically. And so if they also sometimes traded London Open or 2 hours after London Open, this way you could separate those, and like I said, you could then filter it later by sorting by this column, or else making a pivot table to pull out the results on just those the days that you traded those sessions. So this is the first cell here, the long short, that whatever you do will affect the other functions. So for instance, if I made this a short, it's going to mess with all of this. It's going to make it look like I didn't risk anything, and it's going to be all wrong because of these numbers. So you have to make sure that this is just selected correctly. It's just LRS. So then the entry is your entry price. So if the entry here was taken, for instance, at the triangle, you have two ways of finding the entry price. The obvious way is just to use, let me show you this tool here, and line it up there. Otherwise, and then you can see that. Otherwise, there is F3, which can give you some info like the open, the high, the low, the last. And that is referring to the bar that is right here at the edge. So you can see as I move, whoops, I gotta go back to the other tool. As I move forward, these change. And so it's just a quick way to see it. Makes it a little bit easier for me. The stop, you'd find the same way. Again, this is entered. And then the immediate extension, you're gonna have to enter this too. So again, if you were entering on this triangle, what I'm doing for an immediate extension, actually, this is a long entry here. So let's do the long entry because that's actually what it's supposed to be. This is part of the long entry pattern, which I'm not going to go into right now. But if you took this and along at the star, you'd put your stop underneath here. So you might put it at like 0450, and then to find the extension, what I'm doing is I'm going to the right and I'm looking for the first sell signal, basically. So a short setup that I would consider valid, something I would take, or a significant pivot like this. So it's going to be a power bar always, and you could either take the first one if you want, or the second power bar in this case is clearly a pivot where you've got a pretty significant retracement. I just don't hold through these. So when I consider MFE, this is the best that I would typically do on my first contract. Now, if you have runners, you might hold them longer. And if that's the case, we'll talk about how to put that into the spreadsheet. But this is just looking at your main core position. And it would be very rare that I'd hold anywhere further than this. Usually I'd be getting rid of most of it way earlier. And most of my position is going to be gone except for runners that I don't plan on exiting for any reason, really, unless it hits a true target or it trails out. So I want to look at the extension that it gets either on the very first push, or if it makes a very slight retracement and then pushes again, only to make a very large retracement like this. I would put it here. So that's where I'm coming up with that. You can do it however you want, but the way that this is built, it's giving me the risk based in points, based on the entry and the stop, and then I'm giving it that initial MFE, the as far as it could go, basically, if you stayed on process and didn't exit early. And then what I'm asking here, these three are all functions. You can see it here, so you don't want to change this to keep it working. This is telling me if one-to-one risk was achieved given this entry, this stop, and this immediate extension. So this is a limitation of the spreadsheet. Many of us take pieces of our trade off as we go. So for instance, we might decide to enter here and take the first profit here, let's say. And then it goes a little farther. If it starts to retrace, maybe we take another quarter, right? Like you might manage your trade differently. What this is evaluating is basically if you took one contract, had one entry and one exit, would it be at this if it was at this initial MFE, then if that is more than 1-to-1 compared to the risk, it's going to give you a win. If it did not make it to 1-to-1, so here, for instance, it went to, this is a good example. It's a triangle entry that had a 23 tick stop, and it went 16.5 points. So from the spreadsheet's point of view, 1-to-1 was not achieved because we didn't achieve 23 points, and technically we could have risked 23 points. So this is good. The spreadsheet's going to count this as a loss, but most of us are taking profits before that. So just realize this is a limitation to the spreadsheet. It's just simplified. And the result is that the win-loss percentage is actually significantly lower than if you would take profit at 10, 11, 12 points. But I wanted to build it this way so that I don't get, basically so I could see where I should be taking profits. Is 1-to-1 a good target? Or are too many trades going to 12 points or 9.5 points? Or is it usually going to 14, right? I want to know how I can improve my trading by deciding when I should get out. And that's going to change based on market conditions, right? As well as which product you're trading. So by having this spreadsheet and having this figured out in a very conservative way like this, if I'm used to seeing this number at 60 and suddenly I've got 3 days in a row where it's at 40, I'm going to start thinking, okay, something's wrong here. And one thing might be that I'm getting a lot of the spreadsheet's telling me I'm losing a lot. But if my P&L is actually okay in real life, then what it means is I've got to adjust my targeting and think about possibly taking some off before we reach 1-to-1. If I'm not doing well, maybe in real life, and I'm seeing this win rate decrease, then maybe I've got too many trade setups. Maybe I should be limiting which trade I'm taking or limiting when I'm taking the trades that I'm taking. So that's why this is conservative. But just realize that when it says no, the result when it comes to this is going to be the R's and the win rate is going to consider it a loss if it does not make it to 1-to-1, even though most of us are actually still going to have a profitable trade in that situation as long as you're taking profits appropriately. So something to keep in mind. The next column is the R, which is like a way to measure how much profit versus your risk you're making on the trade. So for instance, when I do not make 1-to-1, so here's a no, right? 1-to-1 not achieved. It's going to say that I lost an R, which in this case is 19.25. So the R is going to change. The risk is going to change based on what your risk was for that trade. On the ones, and if it doesn't make it to 1-to-1, it'll always be -1 like this. When it does make it to 1-to-1, if the MFE is further than 1-to-1, rather than just being a +1, you're going to see a multiple. So in this case, if I would have held the trade for the entire period where it was working, I could have made 2.5 times my risk. And so, and then here's one that was more than 5.5 times my risk, making more than 84 points on a 15-point stop. So again, it's important for me to see how many of these are above 2, how many of these are above 4, how many of these are above 5, right? Are there any that are above 10? Like, I want to know in this current condition what the most I can expect to make on a really stellar setup. And the only way to know that is, in my opinion, is to have this objective data. So, because it changes. So if I'm normally taking my first profit at, let's say, 12 points, and I'm all out by 20, and then I do the spreadsheet and I see that I've got multiple trades going to 60, 80 plus, right? What that's telling me right away is, okay, if I want to achieve the number of R's, or the profit compared to risk, the R is the risk. So if my average R, for instance, is 14 points, this is 74 times that 14 points. So if I want to achieve anything near that, I'm going to have to catch some of these bigger moves. I'm not going to be able to exit my trades at 20 points and expect to make 74 R's, right? But at the same time, if I hold for 60 points on every single trade and lose otherwise, I'm certainly not going to have a good win rate. So it's a give and take that I have to figure out based on these numbers. And again, that's one of the reasons I'm doing this spreadsheet. So that's the R. The total R for the day is assuming that every trade in here is the same date. And so you might not want to pay attention to this if you were putting more than one day in here, but you could consider it as like your total R for the week or whatever. All it is it's just taking this R and it's adding it with all the ones before it. So you can see here when you've got a losing trade, this total R for the day decreases, or when I say losing trade, a trade that didn't make it to 1-1. It wasn't necessarily losing, depending on when you exited some, but didn't make it to 1-1, so it's considered a loser. And you can see here we've had more losers than winners, and the losers have cost 2 R, and the winner only gave us 1.27 R. And so the total R for the day, it looks like we're losing money for the day. But you can see that, as far as I've found, that as you keep going, even though you have stops throughout the day, this number gets bigger over time. So that's good to know that something's working. The next part is location. So I've added quite a few different options here. And these are all based on either the profile, the candlestick chart, or else concepts that Simon has discussed with us when it comes to how to decide where to take a trade. So things like returning to the wave to the high or the low, maybe a no supply demand pair pivot, high volume edge, right? Low volume node, the previous VPOC, maybe a naked POC, an anomaly, single prints, Dalton's gap fill, the half gap, a prominent TVO, previous open or close, previous value area high or low, the previous ETH high or low, ETH's value area high or low. And I've got in here no trade zone, which we all know what that is. And then a developing POC or VPOC or the VWAP. The 3 times VWAP, this is an indicator that Simon has used in the past, and I continue to use it. I know it's not on the regular, it's not on the current setup with the TnP algo, but if you have the algo, it's in the studies if you want to use it. It's there. Then we have IB high and low, which you can decide if you use the 1 hour or the 15-minute or the 30-minute, up to you, because this is just things you choose. Then I've got current support resistance and previous support resistance. So the idea here is if we are trying to trade a breakout, for instance, I would use this one. Whereas if we're returning for a retest of a previous support resistance or like a scene of the crime kind of setup location, I'd use this one. Then I've got the 50 and 62 retrace. Obviously this is 61.8, but it's just faster to say 62. And then I've got a catch-all for other. And then, of course, the NA for the trade where you didn't have any reason to be taking it location-wise. So we'll just put that as NA. And like I said, these are not gonna affect the functions. Most of the functions are already finished. And then the only other one is counting your wins at the end. But let me show you what these other cells do. So the larger time frame bias, I'm just looking at the candlestick chart and deciding is it bearish, bullish, or neutral going into the day. And then the session bias, this can obviously change, but if it's a balanced day, I'm going to say it's probably neutral. If it starts with open drive low or lower and it can't break back through the halfway point or the VWAP, it's obviously bearish, right? So we just use our analysis skills to decide where this should be. And the only reason I'm including these is, again, so that later on I can filter my trades and see are trades specifically working when the larger time frame is bearish, or is a certain trade setup only working when both of these match, right? So things like that. And you'd be able to easily filter that once you've made these decisions. Then I've got a number of options for market phase. Things that trending with the session bias, counter trend momentum versus the session bias, just rotational balance. Then I'm specifying chop because most of the trade setups we're using really shouldn't be used in chop. And so this is kind of a good way to see if we're, if this number is lower than expected, it could be that the setups are setting up in chop. And then we have to know that that setup doesn't work very well in chop because it's not getting a very good win rate. So that's why I'm putting that in there. Then I've got consolidation front side and back side. So I'm thinking about this as, so let's say we saw this and we know it's bullish, right? This is front side consolidation. We've not broken power bars downside. We haven't broken a swing and reversed yet. It's still on the front side of the move. Okay, here we go. So we have a period of neutral here, right? Just neutral, and then mark this, or actually let's mark one back here. We'll say not only does it break this one, but it breaks a previous consolidation. That's probably a better way to explain it. A little hard to see it this zoomed in. Okay, so here we're clearly on backside consolidation is what I'm calling backside consolidation. This is as well as backside consolidation. So we moved up, we went neutral, we clearly broke the swing, and then retested it. Backside tested it from below, and now are consolidating. That's backside, right? It doesn't mean we're going to continue lower forever. It obviously can just switch again by going neutral and then going back up again. But a lot of times that one consolidation is different than the other when it comes to which trades are working best. Let's see. So then we have a broadening range, so higher highs and lower lows. And then I've just got other, in case there's other ones you want, and then unknown if you're just not really sure what the market phase is. Sometimes it's not really clear. Then I've got different tempos. So this is, all this is subjective, but basically is the order flow stalled? Are we chopping slowly? Are we grinding slowly up or down? And then I've got like moderate rotational balance, kind of like standard balance, and then some moderate accumulation, moderate distribution, and then the two impulse drives. So that'd be faster, and then fast chop or jerky action, and then just other if there's something I'm forgetting, and then unknown. And now here's where this, so far everybody, even if you're not in the room, has probably followed along more or less. This is the part that is only going to make sense to those in the TradeNPerform room. What I've done is listed the trades that I personally take. I'm going to show you how to add and subtract trades in a minute, but or any of this information if you don't think you want all of it. I'm going to show you how to adjust it, or if there's maybe a trade that you know that I'm not trading, I'll show you how to add it in here. But for instance, just so you know what I mean by these, we've got the power bar, which is PB trap back in, the triangle trap, the star into star, which I'm also calling a trap, and then the triangle star reversals, the 3-bar combo, the triangle up, and then an algo, and then triangle down, which is also, REV is reversal. And then I've got the POC above, or the POC below reversal. We've talked about, everyone should know what these are. If you don't, just change it to something that makes more sense to you. Then I've got a, like the breakout, I'm calling a beat triangle. Okay, so the pivots, triangle pivot, and triangle star pivot. What I'm referring to here is when you have, like for instance, the 3-bar combo, or the other ones, I believe, triangle star pivot. Yeah. So for that one, let me show you that first. That's a little bit easier to find. Yeah, we have it right here actually. So we have triangle up followed by star down, right? So this in and of itself is already a setup. Try star reversal, because it was going up and now it's going down. The pivot trade I'm talking about is where you actually take this range and you look for retests into the range with an algo coming off of it like that, right? Or this one over here is a better one. So for the triangle, for the try pivot, same idea. Just trying to find one that actually sets up. They're not that common, but when they happen, they work well. Okay, so here's one. So triangle down, triangle up. It should be an uptrend. Let's just pretend. Technically, you want these at the uptrend, in the same direction as the trend. Right? Pivot. There's the entry. Right? So it's a scalp. That's what we're talking about there. No supply, demand, plus the star, and then a triangle continuation. So again, I'm just, if you guys want to change these, you can. It's just the names that I'm giving them. So I'm just talking about when you have here. So pink bar with a star, followed by triangle up. Yes, continuation means we're going in the same direction as the first sign. So star and a pink bar, triangle up, buy. So that would be no supply demand plus star followed by is the dash triangle and continuation. Mirroring algos, this is in a trend. Find a trend. So here's one right here. Okay. So we're going down, right? And we've got stars forming here. And so when you get a star going the other direction with the trend on a lower high, that's the entry. If I'm explaining these wrong, my apologies. This is just the way I have it in my mind. And then a pullback ad is just, for example, if you're getting in on this star here after it prints, and then we get a wick back into the star, and you can now add to your trade and keep your risk reward relatively, or your risk relatively small. That is what I'm referring to there. So it's not an additional setup, but adding to a previous setup. So additional setup. So the idea here, I'm just listing the exact same setups. Sometimes more than one trade type sets up at the same time, the same exact entry. Sometimes is a valid trade in two different setups. So I want to know, for instance, if this is the mirror algo trade, but let's say it's also a tri-star reversal, like a triangle up, star down. And the entry is on the star in both of those cases. So I want to know that they both triggered here so that if I filter this later, I'm going to catch both. Like if I filtered for trades that triggered as a mirror algo, I want to see it. And if I filter as trades that set up as triangle star, I want it to show that too. So that's why I'm putting it there. Then I've got primary entry signal. So like in the case I just talked about, that would be a star. I'm also putting a secondary signal, and because sometimes you can still take the trade later, like on a triangle, for instance, after entering on the star, you can add on the triangle, or it's maybe more confirmation on the triangle. Just depends on the setup and whatever you've been taught. But for instance, I've got the triangle, the star, POC above or POC below. No SDs, no supply demand. And then unconfirmed midbar would be like you are anticipating the algo, but it hasn't printed yet. And then just other, if you've got other symbols, and then none, NA. Now, filters, these two are both the same. And the idea here is that I'm listing all the things that I want to filter out to see if they are influencing my trading, usually negatively. So things like being too aggressive on a third wave without waiting for 2-bar confirmation. Fighting an impulsive third wave. And then here's like a positive one, right? Waiting till post third wave with the 2-bar confirmation. Waiting for a divergent wave. So some of these aren't negative, but they're things I might want to filter out to see if it's a good idea to trade with this when this is true. So for instance, like if you had a power bar trap and you're supposed to have a supply demand at the apex, maybe you took one where there was no supply demand 2 bars from the apex. Well, then maybe you can select this for the power bar trap again, and that way you would later on be able to say like, well, this trade stopped, and so did all the rest of them that did that way, that set up that way. So maybe I shouldn't be trading that for now, right? And then I've got like it didn't break a swing. So some setups they're supposed to break a swing first, and then you scalp back the other direction. So maybe it approached the swing but didn't quite break it. Maybe there's an option to break the swing or not. Again, I just want to know, is that relevant? Fighting one timing up or one timing down. Trading in a no trade zone. A late or an early entry is the same thing as, in my opinion, as the anticipating the algo, or maybe just kind of chasing like after the algo prints, but you took it a little bit after that. And then fighting session momentum, low volume, low liquidity. There's no rotation, right? Straight up, straight down. There's no range, which is basically like straight stalled chop. You traded through news, maybe like a Fed speaker. 10 until the hour. We talked about why and how that can sometimes influence trading results. Trading in the first or the last 30 minutes of a session, like regular trading hour open, New York close. And then I've got a spot for setup variation. So if you want to explore, for instance, like what happens when instead of taking the trade the way that I've always taken it, what happens if it sets up just slightly differently? And I took all those. You could put those as setup variation, and then the other one you could just leave this as NA, and then you could see whether or not that is a helpful option or not. An unconfirmed setup is another filter. I have a lot of times where I see something developing, but it's not quite a setup. I get a signal, but it's not actually the signal I needed, and I'll enter, which is an execution error. And I want to know what's that costing me, basically. So I've got that there for that reason. And then competing signals, sometimes it can trigger in one way, but another trade is still valid from earlier. And I want to know whether or not that tends to produce more choppy action, for instance, or some other results. And then I've got an execution error in here in case I'm tracking my own actual trades that I took. And then, of course, off-process trades. So if none of those things apply, you can just hit NA. And this is the same exact thing, just more filters in case two of those conditions applied. Here I just got notes, so things like it was extremely fast action because it was after the non-farm payroll. And then like here I took a, let's see, broke the higher low swing after 3-wave up. It was too fast to expect continued balance. So I probably took like a balance trade and it was a mistake. And then here I've got like a positive thing, right? So I took one trade, but one trade setup, but the triangle, algo triangle 3-bar combo also triggered and both of them would have paid out. So that's something I want to note. Maybe trading at poor location, for instance, it's set up, but I shouldn't really be trading there. And then, yeah, so anything you want, you can write in here. Here I've got quality rating. So I use 1 through 5. This is just what I've always done for my trade journal. I just rate whether or not I would like to take the trade again, which is 3, 4, or 5. A 1 basically means I should never have taken the trade. Something was wrong with it, right? I didn't have the proper setup. I didn't consider the location. I didn't, some kind of information was left out and I shouldn't be taking those trades from my point of view, my subjective point of view. A 2 is maybe I made a mistake, but it was almost okay. And then a 3 or 4 or a 5, I'm rating as trades that work often enough. I did them correctly. And I'm not basing it on results. I'm basing it on how like perfect the setup was. So for instance, a 5 would here is like this trade set up perfectly. And then so did this other trade set up. And yeah, everything was just right in line exactly how it was supposed to be. Whereas a 3 might be the trade looked perfect, but we were making a shallow pullback, and normally it works better with a deeper pullback. So it's still valid, but I didn't really expect it to do much. So I'm keeping track of this because I want to compare how I'm subjectively measuring these trades in my brain and what the actual results are. Because a lot of times I think they are not the same, and I'd like to know that. So, and then here I'm just tracking how many wins I've had in the session. So like here, out of the 60 trades, 36 of them are winners. And this one is a function, so you shouldn't have to touch this. If you have a ton of zeros, right, lots and lots of trades that aren't hitting 1-to-1, what you can do is just copy like an earlier one and Control C, and then paste it underneath, and it'll continue to list it. So if it stops working because you had so many zeros, because this is a certain range, you can see you'd have to have a lot of zeros before it stops working. But if it's not working, that's how you fix it. So let me show you. Let's say you were like, okay, that's cool then, but I only take 2 of these trades. I don't want to have to list through all these trades I don't even know and use. So what you'd do is you'd select the probably the top one, right? And then you go to data and data validation. And it's going to pull up the list of items from the drop down menu. And each item, you separate them by commas. And so you don't need a space after the comma, but you can put it there. So here I've got item 1, power bar trap back in, item 2, triangle trap, right? Item 3, star to star. So if I add like new trade here, right? New trade set up, and then I hit save, it's going to show, oh, it's this one. It's going to show up here at the bottom. So you can erase or add whatever you want on your own copy once you file, make a copy and save it. So let me just take that out. Yeah, okay. And like I said, I just got these two the same. If you want to set it up a different way, that's okay. All of these with a drop-down menu will, you can fix. So like, let's say you don't like you don't want to use the front side, back side. You don't care. You just want to have consolidation. So again, you just go data validation, and you just adjust it like this, and you take out all that, and you make sure you leave the comma, because otherwise it'll look like one long option, and then it'll be gone, right? And then you can Control C, Control V, or even drop all these like this, and then Control V, and it will paste it just like any other spreadsheet. So that should get you pretty far. Feel free to mess around with this one. This is just a copy that I've made available to the team members, but realize that other people are going to be playing with it. So if you're going to share your own trades, or if you want to save a trade idea that you're putting in here, you want to copy it first. If you have more than 60 trades, right, what you can do is copy one of these rows and then make as many, paste with Control V, as many more as you want. And you can see that this number just continues, right? And you can do that, Control C, and then Control V. And then all of the rest of the formatting will stay the same if you do that. See how this is continuing to go. Now, just keep in mind that what it's going to do is copy that one trade. So, for instance, like that's going to jack up my win rate and total R's, but that's not real, right? You have to actually put in real trades like they were before. So, and then if you delete them, if you don't have so many, you can just hit the delete button on a keyboard, and that way you don't lose all this formatting. So, yeah, so that should get you started. If you have any questions, let me know. If you're not part of the TnP room and you want to check it out, give Simon an email. It's TradeNPerform, the letter N, like this, nperform@gmail.com. Okay, so you can email Simon, ask him for a couple days to check out the room. The room does cost money. I've been in the room since July, and it has exponentially improved my trading. That should do it. Let me know if you have any questions, guys.